and talk about the yellow metal because gold continues to shine bright in the global market as well as in the domestic market. In fact, the gold has crossed that 1 lakh rupee per 10 gram mark in the domestic market. So the price before GST stands at about 98,900 rupee for 10 gram, and if we add 3% GST to that, in the physical market, gold prices have now crossed that 1 lakh rupee per 10 gram mark. In fact, not just in the domestic market, globally gold has crossed that $3,500 per ounce mark, and we have seen an uptick of 3% in just the last two trading sessions. On a year-to-date basis, spot gold is up nearly 30% after a solid 27% run-up that we saw in the last calendar year, following a 13% run-up in the calendar year 2023. So it has clearly been a stellar run for the yellow metal, and brokerages even after the run-up continue to remain very positive. In fact, Goldman Sachs has come out with a report where they are expecting gold to touch $4,000 per ounce by mid-2026. So brokerage houses continue to remain very positive, and monetary easing meanwhile is also an added positive, and traders expect at least 3 rate cuts in this calendar year itself, which will also aid the precious metal market. But to discuss this in greater detail, we now have Mr. Sachin Jain, Regional CEO India at World Gold Council, now joining us. Mr. Jain, thank you so much for taking your time out and joining us here on ET Now. First things first,
it's a pleasure for me to be here. Thank you so much.
First up, let's just talk about gold prices, because what a rally it has been. And latest development, of course, is the commentary that came in from US President Donald Trump about Jerome Powell and with respect to interest rates and growth going forward, because of which we have seen that rally come in overnight as well. What's the sense that you're getting with respect to gold prices? Do you expect the momentum to continue?
Well, I think as you rightly said, the momentum has been extremely strong. The metal has performed over almost 30% in this year itself, which is astonishing. We've witnessed 17 peaks of gold price just in the year 2025, and all the pillars on which the gold price stays on, in terms of this being a safe haven, and with the current light of the trade policy uncertainties, you just mentioned about the Fed issues that are happening in the US. So all of these things are very strong pillars that we think that it's a very strong phase for gold, and it should continue.
Phase for gold, and it will continue, but which factor will be the most determinant going forward? Will it be central bank buying? Will that be the factor which will aid gold prices at least for this calendar year?
I think necessarily yes. I think the whole fact of, we've been hearing about de-dollarization and the dollar becoming weak, which is evident, has been, of course, the plus point. But as you rightly said, central bank buying, last year we crossed almost over 1,000 tons of central bank buying. And with what's happening geopolitically, and with particularly, with the markets like India, China, Turkey, all these markets have been buying gold, we foresee that this should continue as well, and will be a very important pillar of how countries are gaining strength by adding gold to their reserves.
And Mr. Jain, what is the sense that you're getting when it comes to demand? Are customers really holding back in anticipation of fall in prices, or demand, especially investment demand, continues to remain very strong?
I think we've seen a complete sort of difference in, or I could even say dichotomy from that sense. So financial investors have been looking at the returns that gold is giving, and that has been rock solid. Just to give you one number on the ETF side, last entire year, the net addition of ETFs globally was about $3.8 billion. And just in the first quarter, they've been an upward of about $18 billion that has been added. So that's one face of it. From a jewelry sector, and particularly in India, that is a very important area of consumption. We've always seen that the consumers, whenever the gold price goes up, they wait and watch. And once there's stability at whatever level of price, we've seen consumers come and transact. So it's in that phase, we've seen a lot of interest in the consumers' minds for what's happening in the gold. There's a great satisfaction that if I have gold in my home, my locker, what the values have gone up to. When we say recycling, then the percentage of recycling is strong, where consumers are buying gold with gold, but that's strong. And if this price stabilizes over the next week, I foresee a very strong shift there.
That's as far as gold prices and demand is concerned. But Mr. Jain, what's your take when it comes to ETFs? Because ETF inflows in gold have also been on the stronger side. Is this continuing? What has the situation been in this calendar year so far?
Well, actually, we've historically seen a lot of sort of buying that or sort of selling that we see by end of the financial year. However, in this year, we saw a very small percentage of real liquidation of ETF in India. And again, we believe that ETF, which is regulated product, which is a phenomenal product where every time a consumer buys 1 unit of ETF is backed by physical gold and there's certainty. I think this product is really at a cusp, and the financial year that is ahead of us, we are expecting phenomenal growths in this product line.
Mr. Jain, thank you so much for taking your time out and joining us here on ET Now and helping us decode what the implications of surge in prices of gold could have on demand going forward.